Welcome everyone to this special EPC briefing with Commissioner McGuinness on corporate reporting in the wake of the Wirecard scandal. We're honoured to have Commissioner McGuinness here to give us an update on how the Commission is responding to the scandal that shook the European financial system last year. It exposed serious deficiencies in the behaviour of national supervisors, of audit companies, and in really basic corporate governance controls. It has raised serious questions about regulatory capture, about how national supervisors are protecting perceived national champions, and in so doing, undermining the interests of the wider European financial markets. As Europe seeks to develop a capital markets union, a trustworthy regulatory infrastructure is critical. And so we're honoured to have the Commissioner here to give us an update on the Commission's next steps and to answer your questions. Just before I hand over to the Commissioner, please send your questions through the Q&A function if you could, rather than the chat. And feel free to start sending them as early as you have them. And once we reach the Q&A, I'll be able to pass them on. Without further ado, over to you, Commissioner McGuinness.
Well, good morning, Frederico, and thank you for the introduction. And it really is good that we are focusing on a specific issue and a very important one, as you mentioned in your introduction. Good morning to everyone participating. I think this is a very timely event and it's focused because Wirecard has illustrated what can happen if the three pillars of corporate reporting, governance, audit, and supervision fail. And I think when you look at the amount of money, 20 billion euro of investors' money was lost. This is a major, major issue. And I think what's particularly worrying with Wirecard is that the FT reported as early as 2015 about allegations of accounting fraud by the company, but neither Wirecard's statutory auditor nor its supervisors detected or reported the accounting fraud in a timely manner. Indeed, those media reports were dismissed as an attempt to undermine a high-profile company. While Wirecard claims that short sellers were seeking to undermine its position, were actually taken at face value. I think even worse, action was taken against the journalists who reported on the fraud. For me, it serves as a clear reminder that there is no smoke without fire. And Wirecard is not the only corporate reporting failure. And clearly there are cause for concern. Our financial system depends on corporate reporting, and we have high-profile cases where all aspects of that reporting ecosystem failed to work as they should. So in a sense, Wirecard is a very severe wake-up call. The company told and sold a great story that wasn't true. Meanwhile, those who reported the real story, nobody listened, I suppose. That's the key message in terms of the reaction to the media reports. And I suppose because of all of that, I've asked DG FISMA to undertake a very thorough assessment of the ecosystem around corporate reporting. So after the summer, I intend to launch a public consultation. At the same time, we expect our assessment and present a legislative proposal towards the end of next year when it comes to the outcome of studies that are ongoing and the application of the audit directive and the audit regulation. So that is our intention, to do something by the end of next year. But obviously at this stage, it is too early to say exactly what's needed to ensure the quality of corporate reporting and indeed its enforcement. But I want to share with you this morning some of the considerations as we launch this process. And before I start, I think it's worth emphasizing exactly why corporate reporting is important. Of course, it's about preventing cases like Wirecard, but fundamentally, corporate reporting helps capital markets work. It gives investors the information they need to assess a company's performance and governance. And it allows wider society hold companies to account, particularly in the area of sustainability reporting. Trustworthy reporting means that investors can be confident in the decisions that they're making. Corporate reporting by listed companies is particularly important because anyone can invest in the stock market, and there is a lot of cross-border investment in shares. And just to that point, a recent Commission study indicates that in EU member states, on average, 59% of shares are held across borders. And these shareholders make decisions about the companies they invest in on the basis of corporate reporting. So if we want to build up the Capital Markets Union, and we do, we need high quality, reliable and easily accessible corporate reporting. And we're doing a lot of work already on corporate reporting. So recently we presented our report for a new corporate sustainability reporting directive. And this is about making sure that companies report better, more reliable information about sustainability, both their impact on people and the environment, as well as the impact of possible risks to the company, including climate risks. We're also working on an EU-wide platform, the European Single Access Point, to provide investors with seamless access to financial and sustainability-related company information. But having the right standards and tools to access information is not enough. We also need to make sure that the information is correct and reliable. And to me, there are three core pillars for high quality corporate reporting. First is corporate governance. So correct, reliable reporting is primarily the responsibility of companies themselves. The corporate governance framework should incentivize high quality corporate reporting. The second pillar is audit. Auditors have an important public interest role to certify that financial statements are correct and reliable. And third, there's supervision and enforcement to back up and check the work of the first two pillars. Overall, the aim is to have an ecosystem around corporate reporting that creates the right incentives for high quality reporting with good rules that are enforced. If we look at the area of corporate governance, we'll be looking at the responsibilities here of board members. And board members are responsible to shareholders to explain the activities of the company, and they are responsible for making sure that reports on financial and sustainability information are correct. So we should ask if their responsibilities on reporting are clearly defined enough. Audit committees play a key role in companies' reporting process, but setting up an audit committee is not always mandatory. And how audit committees are overseen varies widely amongst member state supervisors, which could limit the impact of their work. So we will therefore reflect on how to improve the role of audit committees, whether they should be mandatory, and how to improve oversight. And needless to say, whistleblowers can play an important role in companies' overall system of governance. The transposition of the Whistleblowers Directive this year will be helpful. Moving to audit, while good corporate governance should be the most important guarantee for the quality of corporate reporting, we need checks and balances. And indeed, we have entrusted external auditors with an essential public interest task. Statutory auditors are there to identify and assess the risk of material misstatement in financial statements and publicly report on what they find. So if we cannot be sure that auditors do a thorough job and that an auditor's signature has real value, we have a significant problem. At the beginning of this year, we published the second monitoring report on the EU audit market for public interest entities, with some interesting conclusions on the level of competition, audit quality, and the work done by audit committees. Audit supervisors across the EU found problems with internal quality control systems. They also found a lack of or inappropriate monitoring of high-risk audited entities and insufficient audit evidence and documentation. So we will assess what the reasons are for this lack of quality. Is it due to a lack of competition? Considering that the big four audit firms have a 92% market share for the audit of public interest entities. Recent proposals, such as the proposal for a corporate sustainability reporting directive, open up the assurance market to other independent service providers. However, more and stronger action might be needed to ensure competition. Other reasons might be a focus of audit firms on more attractive non-audit services, which could also cause conflicts of interest. Moreover, are auditors shielded too much from liability or from the risk of supervisory sanctions? Some member states are taking steps to address some of the problems in audit. For instance, shorter rotation periods for auditors, a better separation of audit and non-audit services, and higher liability for auditors. Some member states have also imposed joint audits. So we will learn from the ongoing experience of member states on these particular questions. We'll also look in detail at the supervision of auditors. despite progress through the work of the Committee of the European Audit Oversight Bodies, ensuring consistent supervisory approaches and sanctioning regimes remains challenging. More transparency about the work of supervisors could also increase accountability and trust. So let me turn to the third pillar of high quality corporate reporting, supervision and enforcement. Just last year, ESMA published a report on the enforcement and regulatory activities of European enforcers, which noted that supervisors examined 17% of the financial reports of issuers in 2020. In around 38% of those cases, so 38% of the cases examined, enforcement action had to be taken. And I think that what this shows that from a relatively low percentage of companies examined, quite a high percentage of problems were discovered. In light of the fact that the cross-border nature of investments in listed companies, the impact of supervision by national competent authorities goes far beyond the borders of any single member state. Based on its experiences of the last few years and its fast-track peer review on the Wirecard case, ESMA wrote to me in February with a number of important recommendations to improve supervision and enforcement. And there were three main recommendations. So first, to enhance cooperation between authorities at the national and European level. Second, to strengthen the governance and independence of supervisors at national level. And finally, to harmonise the supervision of company information across the European Union. These recommendations provide a very good starting point for our own assessment of the supervision and enforcement of corporate reporting. And we should certainly not forget the role of the media in reporting uncomfortable truths. In this respect, I also want to pay tribute to investigative reporters that help uncover scandals. And it suggests that as important as corporate reporting is, we also need an ecosystem that is open to information from whistleblowers or the press that runs counter to received wisdom. As regulators and supervisors, we have a responsibility to be proactive and question the stories that companies tell us in the reports that they publish. So these are just some of the issues and questions that will guide our work in the area of corporate reporting. We will carry out a thorough assessment and consult widely. And in this respect, I'm very grateful for the work already carried out by the European Parliament, especially the Economic and Monetary Affairs Committee. Corporate reporting is the basis for many investment decisions. It is the basis for the advice that credit rating agencies give and proxy advisors to investors also give. So it is core. And it is a basis for accountability to wider society. It goes without saying that high quality, reliable corporate reporting is vital for the Capital Markets Union. If we want to create an attractive Capital Markets Union, including for retail investors, we need to ensure a high level of protection for investors. Ensuring the quality of corporate reporting and its enforcement is a key pillar for that. And it is for these reasons that I aim to have a proposal ready by the end of 2022 to tackle the problems and to strengthen the quality of public reporting and its enforcement. I said earlier that there is no smoke without fire. I might add that if it looks too good to be true, it usually is. So thank you for your attention, and I look forward now to your questions and indeed comments.
Thank you very much, Commissioner McGuinness. I'm sure we're all looking forward to seeing the proposals once they're brought forward. I'd again encourage the audience to send through your questions on the Q&A, but I will kick off with a question about supervision and harmonized supervision. Obviously, there's been a series of criticisms of national regulators, not just BaFin, but more recently over Lithuanian regulators, over some fintech companies that process payments for Wirecard. And there have been calls for greater EU-level supervision, mirroring steps that have taken place in banking with a single supervisory mechanism. Obviously, we don't want to prejudge the outcome of your consultation and the work that is taking place, but what do you think is the appropriate balance between national and EU-level supervision in this area?
Well, thank you for the question. I think the balance is the core of this question between national and European supervision. I will stress that obviously, and you've indicated that it's too early to talk about specific measures that we might take arising from the issue we're discussing. I think firstly, no system can avoid all wrongdoing, including fraud, but we should ensure that EU rules work and are applied to reduce risks and to minimize the potential for fraud. When it comes to our current framework, the objective is to ensure high quality corporate reporting and to enforce the rules that are currently in place. And I think what it does, the Wirecard case does raise this issue about national and European. They should work in harmony. And I think the issue about national supervision is that, as I've said in my speech, we have cross-border issues. So if we don't have coordination between national supervisors that's effective, that is also perhaps a weak link in the chain. So I think we will look at all of the potential options between European supervision and supervision at the member state level, with the objective of trying to strengthen supervision and enforcement. And also, which I think is a key part for me in relation to the Wirecard, is the need for early detection, because in the case of Wirecard, it was very late coming. So that I think that's the core, to try and have a better alert system. But of course, in the CMU action plan, we're also looking at this particular issue about whether we need greater harmonization. So it's on the table for discussion, and it is something that we will be giving consideration to.
Thank you very much, Commissioner. I'm going to bring in a question from one of our viewers, Philip Verhaeghe, and apologies if I've butchered your surname. Why does one bad case of fraud always cause new and stronger regulation for the others? And if I may interpret that a bit, is this really a systemic enough case, or is it just an unfortunate one-off bad apple?
Well, look, I think that is a great question, because very often those who are behaving properly would say, look, we were behaving properly, but now you're adding more complications or bureaucracy or rules to our lives. So I think the basis of the question is fair. I think that the truth about the Wirecard case, we don't have the full details, but what we know is very unpleasant at many different levels, including the massive loss to investors. So clearly in that case, there are many problems, not just one, and that's the work that is ongoing to identify where the risks were and what happened first and the sequencing. So I don't think we can ignore that as just being a one-off. I mentioned some figures in my speech about work done in relation to corporate reporting, which would suggest that there are deficiencies, not that Wirecard isn't an unusual case. It might be an extreme, but it's certainly not unusual. So I do think there is room for us to at least make an assessment about whether, because we have this example, which is a very glaring one, that there are some underlying weaknesses in our supervision and enforcement. And as I say, there is always a sense from those who behave well that they are the victims because of additional bureaucracy and rules. We would believe that, in fact, our rules are good, but there were gaps, and many gaps identified in relation to Wirecard. And I think whatever we do, we'll be mindful of wanting to restore confidence of investors in corporate reporting, because trust is a key issue here. So to the question, I understand where it's coming from, but I think we would be negligent if we didn't respond to this particular case and use it to very much check what happened in that case, and are there issues that need to be addressed. For example, the supervisory role of members at national level and at the European level.
Thank you, Commissioner. If I may, I'll ask you a question about audit, which is really at the heart of the Wirecard case, but this comes up in a variety of different contexts. The poor quality of audits done by a variety of large audit companies, as you say, 96% control the market, whether it's anti-money laundering cases of fraud. There's often poor controls when the company making the decision to hire the auditor doesn't want strong controls. There's an inherent conflict of interest almost in the business model. Obviously this is still early days in your consultation and in your work, but of all the measures that you've outlined, whether it's joint audits or increasing competition, do they really go to the heart of this conflict of interest when a company that's bent on committing some manner of fraud gets to choose its own auditor?
Look, I think this question has been asked over decades, and the fact that we're asking it again suggests that there continues to be a problem. I mean, there are the big four, and they have the market, if you like, under control. So in a few areas here, first of all, I mentioned corporate governance, these three pillars, the audit function and supervision, and they have to work well together. On the audit function, I mean, the role of the auditors and the public interest part would suggest that they know exactly what they should do. And the question is, at the moment, where there are offers of other services or where there are only the few, is this actually happening? And we have examples of where it's not happening, and it's not happening in the way that it should. From that point of view, we have to look at how we might change the situation. My understanding is that prior to my arrival in this role, this has been discussed in the past, and a mechanism has not been fully found to deal with the fact that there is high concentration in the audit market. And we do need to make sure that there is no conflict of interest between audit services and non-audit services, which, you know, is potentially still existing. And then the supervision of the whole audit, the auditors, if you like. We have the reporting rules that ESMA, you know, they look after, and then you have auditors that report to the CEAOB. So it's, I think in that area, we might need to look and see how that is working, and indeed if it is working very effectively. But this is an age-old problem, as I've said in my opening remarks, that the question of audit, which is such a serious issue because it also has impacts on trust and on the wider capital markets union that we're trying to build. I mean, it's actually the foundations of the capital markets union that you've high quality audited information for investors. I think that I would also say that because we're moving to sustainability reporting, so we will have financial reporting and sustainability reporting. I dare say that some of the large audit firms may well see opportunities in sustainability reporting. I think it wouldn't be helpful if we had a situation arising around sustainability reporting mirroring what's happening around financial reporting. And that's certainly something that I will be mindful of, because we could potentially create similar issues around sustainability reporting, potential greenwashing, which is something that we really have to guard against. So I don't exactly have clear answers as to which area we will work towards, but I think in my speech, I've been stressing that there is a problem that needs to be addressed. And indeed, I'm always willing to listen to comments from the audience if they have particular views, or indeed yourself, on this very difficult point.
Thank you, Commissioner. And again, I'd encourage the audience to send through their comments or their questions. As the Commissioner said, they're always welcome. But your points on sustainability reporting is very well taken, particularly given that it's a much more serious issue for the fate of our planet rather than. Yeah.
I mean, just on that part, I think that, you know, we would encourage others to look at this area. I mean, I certainly would not like to see that concentration of control over the sustainability reporting. And in fact, it's an opportunity maybe to create something different that might impact on the financial side. So we will be mindful of that.
Thank you, Commissioner. I've got one question on the area of fintech. Obviously, Wirecard badged itself as a fintech company. Now, the more recent issues in Lithuania is also with a fintech company, and more generally, fintech is a kind of rather broad brush, and many people badge themselves, but it's part of the phenomenon of increasingly non-traditional financial intermediation in the market, which our traditional regulatory system is not entirely set up to regulate. What do you think is the right balance between encouraging innovation in the financial system, but also making sure that these new services are properly regulated and that they don't try and escape regulation by trying to badge themselves as technological innovations when really it's a regulatory issue?
Yeah, a few points on this. I think it's really important that there are, you know, great opportunities with fintechs in terms of services they would provide. But you can't ignore that there could be downsides and huge risks as well. I think with COVID-19, the evolution of financial services through fintechs has been quite extraordinary and is unlikely to be reversed. And I think for a certain generation, the idea of a financial institution is a different concept. So there are risks, and the risks are, as you suggest, that our rules may not, you know, apply directly to the fintech sector. And the risks could be different, but there's certainly risks that need to be addressed. So how do we innovate and also protect? I would have a concern that with so many different fintechs operating, and I'm hearing about more and more all the time, and many doing and providing great services, that the pace of change and the evolution is faster than our capacity sometimes to regulate. We do say same risk, or rather same rules for same risk, but I think in some instances the fintech sector has different risks. I think that's something that we need to be mindful of. So we need to encourage innovation, and I think it will continue. But equally, with every new innovation, we shouldn't allow it to escape the regulatory reach, while at the same time not crippling innovation with an overly difficult regulatory reach. But there are other examples I read in the newspaper constantly, whether it's relation to anti-money laundering and terrorism financing, where sometimes this can happen through that new entities. So I think we have to be aware, first of all, it's a reality. And secondly, that we need to be very conscious of perhaps, tailoring our regulations to fit these new models. And each of them are different. And I think that's one of the things that I'm very mindful of, that every time I speak to or listen to a number of fintechs, they provide different services, they do it in a different way, but they're also cross-border. And I think this is where we need to really focus on, because when you're doing stuff on an app or whatever, it's not location based, it's very much cross-border. I would have a concern that some fintechs go to the member state that has the least, if you like, the least harsh in terms of getting started. Many would say that they need that to get started, but others would suggest that it's being done to avoid regulatory capture. So we're conscious of this, very conscious of it, and we'll be mindful of it as we look to reviews.
Thank you, Commissioner. Of course, it's a very difficult balance between these two incentives. I'm conscious of your time and your schedule, so unless there's any other questions coming through the audience, I will just ask one last question, broadening out the scope a little bit from what we've been talking about, because obviously the Capital Markets Union is going to be a critical instrument in our recovery from the COVID pandemic. But have there been any lessons that you've learned as a result of the pandemic? Also, apologies if you can hear the construction work outside.
Don't worry.
That you've learned through the pandemic that have modified perhaps your approach, and how do you view the Capital Markets Union and the action plan actions in our recovery from COVID?
I think the first thing for me with the pandemic and the Capital Markets Union is that it's made it more urgent and more necessary, because we are now in a recovery phase. We're also entering a phase where we're going for sustainability, so both green and digital. And if you look at the assessments we've made around the investment needed, it's 350 billion euros annually up until 2030, just to meet our 2030 targets. So while the private sector will provide some financing, or so rather the public sector will provide some, the private sector will need to provide a great deal. And the Capital Markets Union needs to, I suppose, be developed more rapidly in order to meet those demands, because bank financing is not sufficient. The second lesson from COVID is a wider one, in a sense, around resilience. Because I think at national level, I think there was not a preparation for a pandemic that would hit the public health system. But equally, companies and the financial system, I don't think factor in that a public health crisis can impact their profitability and their sustainability. So I think there are lots of lessons around that. But the key lesson around, for me, on the Capital Markets Union is that we have to build up these capital markets. It's more urgent than ever that we do that. And we have to build up resilience generally within the financial system. And that's the sense I get from member states, from ministers, that they too understand how urgent Capital Markets Union is. We all know, though, these take time, but we will do a step-by-step approach. We have outlined the action plan, so we will continue to deliver on that. But the heightened awareness of both the need for the capital markets and the need for resilience, I think, are two messages that I would certainly take from the pandemic.
Thank you, Commissioner. We've just had one last question come in from Martin Lemstra. The Commission is about to propose a new proposal on corporate due diligence on the Commission reindeers on sustainable corporate governance. To what extent is this worked out jointly between DG Justice and DG FISMA, given your previous mention of corporate governance as a central pillar?
Yes, you're right. This is the responsibility of my colleague, Commissioner Renders, but clearly we talk, and FISMA and his DG, we talk to each other so that we get the right balance here. I mean, I talked a lot about corporate governance and the responsibility of directors, and I think more and more board members should think twice if they are going to sit on a board and look at their wider responsibilities rather than just looking internally at the bottom line. So I think we also need, I think, training for all board directors, particularly around this twin issue now of sustainability and finance. So rest assured, we work hand in glove to try and get the right balance.
All right. If there are no more questions from the audience, then I think we'll draw it to a close. Thank you very much, Commissioner McGuinness, and I think we're all looking forward to seeing what proposals you bring forward that try and tackle these very difficult issues.
And thank you for the opportunity, and thank you for the questions, and have a good day. Take care.